Good morning. It's Tuesday, April 9th, about 6 a.m. Central Time. Overnight, we're seeing new record highs in gold and new contract highs in silver futures. The dollar index remains under pressure, helping give a small boost to the commodities complex. It's going to be a light economic data schedule release here today with no Fed speakers, so there's little here to damage the current trend at the moment. U.S. equities remain under pressure, and I expect to see softness coming into tomorrow's CPI print. The levels I'm watching in the S&P 500 are really, the market needs to break through 52.57 on the upside, and it could get that boost back up to 52.50. This line in the sand for the shorts is going to be right around 52.89, and then a breakdown on the S&P 500 through 52.30 could see a washout down to 52.11. The downside target that I have on the shorts is 51.70, which is the 50-day moving average. Now, back to the precious metals markets here. Yesterday, we did experience some profit taking and some ETF outflows, both on GLD and SLV. I did see a lot of traders here taking some profits on positions, and it's hard not to when you hear about new contract highs, new all-time highs, and record highs here each and every day. China, though, continues to pile in, making large purchases of bullion overnight, and that's what helped spark and fuel this overnight rally. I think the path of least resistance remains higher, while expecting higher heightened volatility coming into tomorrow's CPI print. Now, looking at the CME's Fed Watch tool, you have about a 50-50 percent chance here that the Fed does cut rates at that June meeting. The number of interest rate cuts had gone from 6 in December all the way down to now it's about 2 to 3. And I think the more likely scenario is 2. If you read a lot of the stories that I write, I have been trimming down those expectations as a lot of the inflation data inputs remains high. We're seeing crude oil futures continuing to push up here, having some degree of sell-off here yesterday with the talk about a ceasefire and a pullout of some of the military operations in the Middle East. Now, we are seeing the 2-year Treasury yield also come off a bit here today, and it's helping providing a small tailwind behind the gold market. Your line in the sand in gold is really rising at 2170 to 2165 pocket support. I think right now it's about 2240. That's where we had a consolidation period at the moment. So if you're long gold or you're considering purchasing gold futures, I think your first line in the sand is going to be 2240. We get a close above there. I think you take off a third of your position, and then you really wait for 2170 to down to 65 as your stop out point on another third. And then I would say carry 1/3 as if inflation starts to come down and ease, you'll see prices turn back up again. I see a lot of people going out and they're buying these record highs right now on gold, on silver, but they don't have any risk management strategy. So I think that those are kind of your key levels here. On silver, it's really about 25.73. You got to close below there. I think you got to lighten a third of the position, and then you start looking at some of these other key levels, but maintaining 1/3 for the duration as the manufacturing activity continues to take off here globally. So some other proxies people are also playing in relation to the precious metals is the Australian dollar. It gets the boost here from the sell-off in the US dollar index. It's also broken out on the chart, but not gotten away. It looks like almost like a lagging platinum chart. And then additionally, many of Australia's dominant factors here on supporting their currency are the commodities complex, metals in mining, wheat, agricultural products, things like that. So when you do get that tailwind behind the commodities complex, the Australian dollar tends to rise with it. If you got any questions, give me a call. If you'd love to work with us over here on the commodities side, I work with individuals on a one-on-one basis. We do also have a tear sheet here I could send out with the performance of our CTA program. And if you only like U.S. equities or an equity basket, we do have Blue Line Capital, our sister company that I work with my partner Bill Baruch, and we can get you set up with there and get you out the tear sheets as well. So you love to see performance, you want a hands-off approach, that's the way to do it there. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.